Namaskar and a very good morning. Welcome to the audiocast from Kotak Securities. I'm your host and guide, Anindya Banerjee. Finally, we saw a big move in the dollar rupee. After a very, very long time, the momentum traders made some money. Yesterday, July futures closed well above 79 और आज in Asia, spot reference is trading above 79, 79.0203 to be precise. अगर यहीं पे onshore open होता है, then July futures can start trading above 79.20. Or interestingly, day before yesterday say there has been a consistent bid in the offshore market. How do we know that? Because we monitor where the offshore USD INR futures are trading, for example in DGCX, or offshore में NDF में जो forwards कहाँ पे trade कर रहा है USD INR का, and then we compare it to the forwards which are trading in the onshore market, that is in the OTC. If there is a consistent premium in the NDF or in DGCX, that's a clear sign that the hedge funds and the FPIs are on the constant bid. They're trying to buy dollars. That's exactly what we saw Monday evening say, and that's playing out. So we have to understand that जो carry trade होता है in emerging market currencies, in USD INR. In USD INR, a biggest chunk of the carry trade happens in the offshore market. Domestic में भी होता है, but the sizes are limited. Because offshore में the large chunk of the carry traders operate. अगर carry trade unwind होगा तो पहले वहाँ से start होगा, and that's exactly what is happening. And we have been flagging this risk for the past few weeks. जब से the forward premium has collapsed, we have been saying that Indian rupee has lost a major supporting anchor, because high forward premium does two things. One is it deters shorting because you have to pay that cost, and it also attracts selling because you receive that forward premium as an earning. And second, it incentivizes hedging from exporters. Dono create supply of dollars in the derivatives market, and that helps to stabilize the dollar rupee along with the RBI intervention. But जब वही forward premium plunges to an 11-year low with the spot drifting to an all-time high, then that carry traders start to unwind their shorts. So that creates a demand for dollars. At the same time, exporters are not very encouraged to come and hedge because the forward premium is exceptionally low. हो सकता है उल्टा importer का demand आ जाए. So net instead of supply of dollars in the derivatives market, we get a demand for dollars in the derivatives market. Of course, RBI is going to intervene, and RBI has been intervening. But then RBI becomes a lone ranger. मतलब वो अकेला ही market में खड़ा है जो dollar को supply कर रहा है. So if they do not participate actively on any particular day, the risk of a sudden flare-up increases, and that's exactly what happened yesterday. The RBI was there, but possibly the intervention was not enough to absorb the demand, and that's led to the price rise. And if we look at the overall performance of the Indian rupee vis-a-vis its peers, it's still a median to a slight outperformer compared to the major currencies, which means RBI, even if the Indian rupee, let's say, depreciates by another 1% quickly, it won't really make the rupee a major underperformer. So in that case also, RBI may allow it to depreciate maybe another 50 paisa, 60 paisa, and then they come in quite aggressively, because RBI had intervened quite aggressively and lost a lot of long dollar positions, be it through the FX assets or be through longs in the forward market, trying to defend the USD INR within a very close range for the last 2 months. So abhi, to allow it to appreciate a bit the dollar, they would actually make their intervention far more effective, because having depreciated Indian rupee will not look so overvalued, and will find the natural, let's say, bids from the exporters who would come and hedge at higher levels, which will be beneficial because RBI intervention, exporter selling is beneficial. But again, we have to keep a close eye on the forward premium. As I said, that has really turned it against the Indian rupee over the past couple of weeks. What are the important levels to watch? 78.50 to 78.60 is going to be a very strong support band on the spot. And resistance, as I said before, is not important here. The resistance becomes important where RBI starts to intervene heavily. That's the place where the market observes that level as a particular resistance. Otherwise, chartmates trading at all-time high, RBI plays a bigger role. So वहाँ पे resistance don't really matter. If RBI comes in heavily at a particular level, that's where the dollar rupee will get stuck. But bias is upward. Global markets are conducive for USD/INR to move higher. So buy on dips is the trade. You can use either futures or even call spreads to play out this move. Straddles and strangles we are not shorting since day before yesterday, and that call has played out really well. We'll observe and update you through our Telegram channel. If we see a possibility where USD/INR is getting stuck in a range because of RBI intervention and speculative buying offsetting each other, then of course we will issue the recommendation to go short, straddle or a strangle. But as of now, we don't have a trade on a short options. But again, in case you are not on the Telegram channel, do join us on the Telegram channel. It is Currency Corner by Kotak Securities, and we'll be updating you through that. So that's it, folks. This is Anindya Banerjee signing off. A fantastic day ahead.